Lockheed Martin's Aerojet deal was terminated.
Right.
Not a surprise there, of course, that would occur, at least given the FTC's opposition. But I did want to take a look at, and again, we saw the moves in those stocks as a result of that when we first saw the FTC and kind of got a sense that this was not going to happen. But you know what's interesting there was no reverse break fee. One would have anticipated, perhaps, that Aerojet would have made sure to have a reverse break fee, namely getting paid if, in fact, the deal broke.
Right.
And they were forced to walk away. No, failure there, I would argue, on the part of those who put that deal together. Now, initially, there was support from the Department of Defense for this deal, and that certainly seemed to potentially have emboldened both sides, and perhaps was one reason why Aerojet didn't see the need for a reverse break fee. But
Aerojet General could be an important, it's a very good company. I don't know why they should allow it. It's stifle innovation.
Well, your buddy Greg Hayes was happy to see that deal go down.
Yes, right. Well, he's not actually my buddy, although I did text him today.
Oh, you did?
Yeah. Okay, so get
anything you want to share? Or was it just Super Bowl related?
No.
Okay.
Earnings related. No, you can't tell me anything. Now, David.
Yes.
The best piece of research today, and we all have to talk. But you remember what day today is, just in case you haven't.
It's Valentine's Day.
Right. So, Wells Fargo, Mike Mayo has sent a hate letter to Jamie Dimon and doesn't even mention his name. He's saying love is blind for the CEO, and that basically Jamie is trashing earnings for as far as the eye can see in order to be able to go against small fintech firms. This is the most demeaning. Jamie, I know you're watching. I want to apologize for Wall Street Research. This is really vicious. It's a vicious piece of research.
Why are you apologizing? Mike Mayo's a fairly well-respected analyst, been on our network many times, covered the banks for a very long period of time.
Because I think that he needs to spend that money. I think he's way behind everybody else. He's way behind Bank of America, JPMorgan.
So you're agreeing with the note in some way?
Well, I want Jamie Dimon to be the best banker of the best bank.
Yes.
And this is about not needing or not spending the money, basically, I think. Now, he'll disagree with that.
But, all right, Jim, just take viewers back for a second.
The stock was down 3 on this at
during earnings season, JPMorgan sort of set the tone by having higher expenses and forecasting higher expenses than had been anticipated and even than some of its competitors saw.
When I spoke to the CEOs of every major bank, okay, they were all very calm and expected it. They have felt that JPMorgan had underinvested for years. And I'm talking about companies, all of which you'd recognize. And I thought that this piece was wrong-headed, if only just because they have to do it. Now, David, this stock was at 150 this morning. And I want to warn people, when you're trading at 445, which a lot of people like Robinhood, a lot of traders, all crazy times, you get horrible prices.
Right.
You're not going to find a bid at 152. The people, they're not idiots on the other side. So stop doing these things at 5 a.m. You're wrong all the time.
All right, but what's the point you're trying to make on JPMorgan?
Oh, no, I'm just saying...
Do you agree with this idea that they've underinvested and therefore have to invest more? Does that make you less positive on the stock?
I am less positive on it, but on Valentine's Day, for those investors whose love for JPMorgan transcends the need for more validating information on spending and targeted metrics, we say, love is blind. There we go. A little Wall Street Research humor.